when the price gets below $1, we're not forced to reverse split, but it's kind of something that makes sense in this case. So,
Yes.
yeah.
Educational moments, as I'm just going to repeat what Mackenzie just said, we're not forced to. People need to know this for listing standards, and an exchange traded fund, an ETF, is not a stock. So no, we're not forced by rule or the exchange or anything like that to reverse split. But when a fund gets too low priced, and that's a gray area. What is too low priced? We think it gets a little difficult to trade. There is a spread between the bid and the ask. And if it's a dollar fund, 1 cent's kind of significant, a whole lot less significant than it's a $10 fund or an $8 fund. So that's why we choose to reverse split. By the way, it has a new QSIP. Not that many of you need the QSIP, but there's a new QSIP listed on our website for the new shares. But this might be just too simplistic, but people need to understand, because everybody had a bad taste in their mouths for some of the Canadian cannabis companies in particular that have reverse split multiple times. Sometimes they would reverse split at the same time they were doing a share raise and issuing more shares. So a reverse split or a split on an ETF for the actual capital structure, for the actual money, is meaningless. Everybody really, really needs to understand that. It is completely meaningless. All we did is we took the number of shares and divided by 10, and everybody that had 10 shares gets one. If you're somewhere in between, you might be getting some cash in your account, something like that. It's just for trading efficiency, things like that we reverse split it. But please, please understand, there's no such thing as dilution. Dilution, it's harmful. It's nothing like that. It's just a record keeping thing.